Good morning, Tommy Grisafi, ATI ProMedia, coming to you from a blizzard in Fargo. Winter's not over yet. Remember, just a couple weeks ago we had that warm weather. Well, you can cancel that. It is nasty out, but very much a southern North Dakota thing, the whole state of Minnesota, and you just don't have to go far before a lot of people receive some great moisture. Heard from clients in Iowa yesterday, excited about 2 inches of rain. South Dakota, some moisture happening. Probably all good things as we come into spring. We know those areas need it. On the headline front, all eyes on cocoa. It's fun to watch and talk about it. I talked to a client last night who had asked me a week ago, "Will you sell me a cocoa future?" I said, "I have no interest. I'll pay you to not do your one lot in cocoa." He lost, he did it at another firm. He lost $18,000 on one cocoa future just in the last few days, not at our firm. And I will not be, I am not interested in making the hot chocolate trade and sugar in the news, cocoa, everything else. But anyway, my point of the story is back a few months ago to do a cocoa, the margin was like maybe a couple $1,000s, but it started moving $5,000 a day. Now they've upped the margin to like $7,500, but cocoa's moving $8,000 a day. A lot of risk there. All right, let's switch subjects. We have a bridge that went down. That's the headlines I woke up to this morning. Horrible headline out of America: a shipping container bridge from overseas, an overseas owned shipping container bridge, literally hit the bridge, I believe in Chesapeake Bay, knocked it flat over. Disaster, some death loss there, nothing good about. Of course, yesterday we talked about managing risk. Brady and I will talk about that. We've had some extreme volatility in the cattle market the last few days, and we had some headlines out of both our friends at Farm Journal and Bloomberg talking about something that's happening maybe with the herd down in Texas and other areas. But it seems very much on the gossip mill. We'll see if it spreads. We'll keep an eye on the cattle market, and we'll also look at milk. With that, Joe, bring Brady in the show. I'm remote. If you guys can hear me, give me the thumbs up. Uh, you know I didn't make my pillows like that. You know I had to fluff the bed before we started the show.
Looking good, Tommy G. He's ready to roll anywhere, bringing today's news today from
Yes, sir.
wherever he's at.
So the Cattle King, what do we have going on over there? Talk to me about cattle.
Well, cattle had a pop and a drop, or a drop and a pop yesterday. The reverse of a pop and a drop. Gapped lower. Had some bargain buyers coming in, pushed the thing a little bit higher. Feeling good about digesting the report, only to sell off. And then we're down again here today. Looks like the board's down three. Feeders are down 380 to $4. Ugly. Fats are down 280, breaking some moving averages. But a lot of headlines out there. The bird flu, you hit on that a little bit. I think there's so much uncertainty there, Tommy. It's so much unknown of what that is, and like you said, rumor mill. Sometimes we get a headline and we roll with it, and we really don't know what we don't know at this point with that.
Yeah, well, I believe Tyne Morgan covered that story from Farm Journal, and it got a little coverage. But when you hit the Bloomberg terminal, that goes out to the whole world. So how
Hmm.
people take that information, digest it, uh, maybe they're selling off this market on that, and they shouldn't be, right? Could be an opportunity. Who knows? But the cattle guy is always long and always hoping for higher prices. Often, God, I hate to ask this question. It's a loaded question, but of all the cattle out there, a large percentage of them, Brady, are always walking around unhedged. Is that correct? Unprotected,
Absolutely.
uninsured.
Yep.
Okay,
And you're
that's not a wrong statement.
correct. Yep. Yep. And we got the next calf crop too, just like a corn farmer, a grain farmer. We got another calf crop coming behind it.
Yeah, that's interesting. Do we dare talk about cocoa? I don't know what to say there, except for it's just fun to talk about, and it is a commodity, and it's nice to see. Let's go to the other one, corn. Looking at my quotes here, corn's had a nice little rally, huge rally in corn. Breaking news: it was down two, it's now up one. Yeah, that's a big one. But for corn, that's what we have, and that's a sign of lower volatility. Speaking of volatility, we have that crop report on Thursday. So corn's up one, wheat's down five, seeing some price action. Yesterday, we had a massive move in Bitcoin. When I went to O'Hare yesterday, Bitcoin was up $7,000 a Bitcoin.
Wow.
Seeing incredible volatility. Some people are very much worried about America's debt. I think Brady, the United States is putting on our deficit like every 110 days. We're putting on another $1 trillion of debt. So we're going the wrong way. It'd be about 3.5 trillion a year, and there seems to be no stop. And one part that you guys as someone who raises cattle and everything else. All those years I stood in the Board of Trade, when you stood in the 10-year pit or the bond, you don't realize it, but the United States Treasury is constantly having auctions. I mean, daily auctions, weekly auctions, 30-day bills, 60s. If you looked at Treasury.direct or something like that, that's like where you could go give the government money and put it actually in a bond. But the amount of debt we're issuing, and I think the fear, Brady, is who keeps buying this? Who keeps subsidizing our party? Any thoughts on that?
A lot of that is beyond me, but there's definitely concerns about how we handle our monetary policy, and but it is very much beyond me, Tommy. I'm not an expert in that space.
Well, the reason I say it, I had CNBC on to my right, and Rick
Mhm.
Santelli was talking about it, and he said, "I've been in this business since the '70s. What's happening is making me very nervous, but it's been making me very nervous for years." So it's an easy headline to talk about. Oh, the deficit hit this hit that. But yet we none of us, you, me, anyone else, Brady, we don't have a solution like, oh, when it hits 35 trillion, the Dow
Mhm.
Jones is going to break 5,000 points in a few days. We don't, it just doesn't feel right, but it keeps happening, and that's that, right?
Agree. Yep.
So we what else do you have here? The bridge. I did see a post on social media and someone said it's amazing. I had no idea I had this many friends on Facebook who were experts on bridges and their infrastructure. So we'll leave it on that.
We can
Uh,
wear lots of hats on this show, right? Anywhere on Twitter, everywhere,
yeah,
we become a bridge expert, we become a medical expert. The internet makes us all really, really smart, doesn't it?
yeah. Let's talk risk management real quick as we have this report. Yesterday on the premium content, Connor Bridgman, myself, we broke down the what to do before this report. Joe, if you could pull up that slide, that'd be great. So Tommy Grisafi, Connor Bridgman, that was yesterday's premium content. Uh, there it is right there. I'm the good looking one on the left, the plus model on the left. Connor's, look at that youth. Oh man, look at
Connor
that
the
guy.
wingman. Yep.
Connor,
Yep.
no,
Yep.
Connor was star of the show. He broke it
He
down.
was.
So what we talked about is we have a crop report on Thursday. American farmers still holding a fair amount of 23 crop. We have to get in control of the 24 crop. The way we broke that down was number one, we talk about, do you want a cash sale, right? We've had some clients the last few days and weeks sell some beans up here. Having a cash sale, make cash sales? Question mark. Get reownership? Explanation point. I'm Ron Burgundy. Look at him read the teleprompter. Uh, these are serious things. So, do you want to get sold? It seemed easier to get forward sold in beans at $12. It just folks like round numbers. The math worked a little bit better. But if you do not want to get forward sold, if you're up in North Dakota and it just snowed 8 inches and it's 20 degrees in a blizzard, you say, how do I know what I'm going to grow? But over history, the American farmers tending to grow big crops. So let's go to Plan B. If they're afraid to get forward sold, what did we suggest for them on Plan B on the short dated options, Brady?
Oh, you guys threw out a number of choices. That it was a great video. You guys walked through, the what and the why, and then now the how of, um, different choices you have. 3-month floor there, July short dated corn puts. Great way to go in, get some coverage here that covers you for some very critical months in this growing season. Those July short dated corn puts expire to the third week of June, Tommy. Um,
Yeah, around June 22nd, usually.
Yep. Good position there. Same thing on the soybean puts. Got a 3-month floor there. July short dated soybean puts. I like those. I don't know about you, Tommy, but they're working their way in being a bigger piece of my business versus those traditional full out November, December type put floors. These manage very well. We get a rising market. You get a market that breaks. Good, inexpensive way to get some coverage on into these critical reports. So.
Right. And I think in the mind of the farmer, Brady, whether you buy 3 months of insurance or six, it's kind of like when my wife says the insurance is due for the house
Mhm.
and we could pay it monthly, quarterly, or yearly. In the end, it's about the same number. It's how you like to break it down. So if you don't want to hear you owe $4,000 all in one day, then you break
Mhm.
it up over every month, and it comes out to a lower number. Sometimes smaller amounts make people feel better, but the same problem will be there 3 months later, and that's when we go to our traditional options. Break those down. I use Nov and Dees. What option do you use if you were hedging like Kansas City wheat? Is that more of a SEP? Would that be your traditional?
Oh, that's a good question, Tommy. Because where we use the July KC wheat options puts, or a sale with a July call. That's typically what we use. But that July option falls right in the middle of wheat harvest every year, Tommy. We're harvesting wheat. We're halfway through harvest, June 20th, June 22nd, and we've got some options positions to deal with. So I typically use that July. I'm not afraid to go to the SEP, but the SEP doesn't manage quite as well as those Julys do. One that I really like is that August cereal month when we come out in May. That's a good choice that gets us just enough where we get through harvest, we get that first 30 days of free storage. It's a good tool to use.
Yeah, I do have a couple clients, Brady, a couple Iowa farmers who are pretty much 100% sold. They have HTAs at the elevator at
Hmm.
phenomenal levels. These are guys who are very aggressive sellers. They're always bearish. They love being forward sold. They're more comfortable being forward sold and then managing that upside by buying futures if and when they were lower. In this guy's case, it worked, right? He
Hmm.
he had forward sold grain when times were higher. He bought a combination of futures and options. Remember, 5, 6 weeks ago on the show, we said that option volatility was at multi-year lows.
Yep.
It was right before we made 3-year lows. So option volatility in corn options was at a low. We then broke another 20 cents in corn futures. Option volatility picked up, and that's for the calls and the puts. It's the price of the insurance picked up right as we went into those new 3-year lows, and then option volatility stayed. Yeah, it's okay. It's not like a farmer might say, or someone purchases an option might say, "Oh, those are expensive." I'm like, no, those are half off compared to what something was during the Ukraine war. It's all
Yep.
relative. Also understand, and this is not the fun part to explain to people, the price of what they're insuring is less. We used to call $7 corn a $70,000 pickup truck. Unfortunately, folks, you're growing $45,000 pickup trucks this year. You're insuring 450 corn, not $7 corn. You want to talk about that a little bit, Brady?
Yeah, absolutely. Yeah, yeah. I mean, that's the risk of the market moving, right? And when we get, as markets go up in the grain markets, that volatility tends to increase, right? And on the cattle side of things,
Hmm.
when the
I was
markets
just
go
going to ask you now,
down,
flip it to cattle because the cattle
the
is so much more expensive and you're insuring a lot more
yeah. And when those
price
markets go
per
down,
pound.
the volatility increases on the cattle market. It's kind of interesting that how they act a little different on the volatility perspective, from grains versus cattle.
Yeah, I see you have some nice charts loaded up there. Let's bring those in and then we will grab a
Yep.
question and we'll get out of here. We have some work to do.
Okay. Got a couple graphics here. We had a freeze event here this morning. We're really cold down here in Kansas. Um, the crop progress down there below, winter wheat jointed. So the southern part of Kansas, 5-6%. This is based off the crop progress here. But we had some low temps. You get in northwest Kansas, you get the teens, 12, 13, central Kansas, 20, 25, that area. I did a little research here, Tommy. A little research, went back and looked at a K-State update on freeze injury. It seems like 4 out of 5 years we got a freeze event to talk about when it comes to wheat. Really get concerned when it's below 15 to 10 degrees, and that previous chart showed 20s there. You could argue that this curve, because of how warm February was, has shifted maybe a little more left, but an interesting graphic. We're not going to know how this freeze event plays out for a number of months till those wheat heads emerge. But take a screenshot, take a snap, talk to your agronomist. I think these markets sometimes price in some opportunities when we get these scares. So sent out an alert yesterday to my wheat customers about wheat marketing. Good opportunity there.
We
Got the
crossed what,
report.
the 50-day in wheat, you said?
Yeah, we did. Yes, let's throw that. I'll switch over to that real quick, briefly. Here's the wheat chart. You can see this green line right here on the chart. That's the 50-day. Yesterday we popped above it and then dropped and settled and actually closed below it on the July contract. And here we are today, going down, testing that 9-day moving average. We've got the 9 and the 20 below us. Pay attention to those, folks. Hopefully we can hold those. But we've had a nice rally, 40 cents off
Hmm.
the early March low there. So good to see here.
Yeah, but Brady, that used to be the opening range on a Sunday night 2 years ago. So that's what
40.
today does.
Good point. Absolutely.
Real quick,
Yep.
I assume that blue line's the 100 and the red's the 200, stepping out
Yep.
on a limb, or
Yep. You're right, Tommy.
well, say that one more time. That's just nice to hear.
You're right, Tommy.
Oh, I like the way that sounds. We'll make a short of that. And we're a long ways from those. So the trend is definitely still down. The short-term pop, I imagine most of the grains would look like that, corn, wheat, and beans. Real quick, let's break down those numbers for Thursday. Thursday, big report.
Okay, yep. Let's so we got Acreage here, the focus here. Let's see if that works. Oh man, fancy,
Oh,
fancy.
I'm impressed.
Dialed it. 91.8 is the average trade guess for the corn acreage. Going a survey based into the numbers. The outlook was at 91 here a month ago. Beans outlook number was 87.5. The trade's looking for 86.5. So some of that little more corn, a little less beans, maybe priced into the market. Cotton acres, got to keep our eyes on the cotton acres too, Tommy. For our
Yeah, it
friend
could be a
Luke.
big deal. Looking at the markets, April live cattle down 300. Very, very challenging day on the cattle. Waiting to get a feeder quote here. If you could quote those up.
Let's throw those
That
up on that
yeah.
chart here. I'm going to dial that in because that's an important thing to bring up, Tommy.
Wow.
Yeah, this is April feeders. We've rolled over. I'm going to zoom back out one more time. So this is September price up here. We sold off into December. $60 move on the break. We retraced nearly 80% of that move, $40 of the move, and now we're sold back, coming back to test this 200-day moving average, that red line. We broke the 50 yesterday. These moving averages, they matter. They're points of contention, and I think traders got to defend them for those trends. But breaking the 200-day moving average on the April feeder chart here today, Tommy.
Yeah, let me ask you a question. That red line, oh, is the green the what's the red
Green is
line
the
that's
green
yes,
is
sir?
50, red is 200, and the
Okay.
blue is 100
Why
down
is the
here.
red stop to the left? Is that because it was a new contract, like it's not daily continuation?
Right.
See how
Yet
we
we
have
had to have good question. We had to have 200 days of trade before we can get the 200-day moving average, right?
I mean, I hate to ask, but I this is our show and I don't know, so I imagine them watching didn't know either. They're like,
That's
"What? Brady just decides where to draw red lines?"
most charts are just doodles that we've run out there, right?
Yeah. Well, I'd make a joke about every ship in the bottom of the ocean
The
has a
chart is
chart
not.
room, but that wouldn't be funny today now, would it? It's not funny at all, but I don't know how the heck that bridge, how that boat hit that bridge. That's just one for the uh, books here. All right, with that, let's wrap it up. Anything else you want to talk about here? We're going to do some premium content this afternoon. We got a couple calls into Mr. Brian Basting. Tommy, did you see the announcement from Vilsack, Texas Ag Commissioner yesterday at 2 HPA in a few cattle herds now? Yes, we did see it. I'm surprised that we we noticed it. The talk we get research wires go out to within advance all night, and a lot of stories. A lot of people start picking it up. Big move in cattle, folks. You should check that out. It's interesting, Brady. To one of the things when we started ATI Pro Media was we wanted to break down the news live while it was happening. I
Hmm.
notice when I watch a lot of shows, they're talking about this. They're always talking about what happened yesterday. So
Yeah.
tomorrow's headline on some shows will be like cattle collapse on HP. Like here, we watched it, right? We watched them
Yeah.
open, we watched them break, we broke down the charts. That's why you're watching, folks. So this is ATI Pro Media, the free edition. We'll have premium content every day, 6 days a week, and then of course we could tell you more about that. What's the worst thing that can happen if a farmer doesn't have the bushels they forward sold due to bad crop? That would be a great question, and that would be a whole nother segment because I'll take a stab at it, Brady. It's
Okay.
very it's very important to understand your relationship with who you sold those bushels to. Did you sell them to an ethanol plant? Did you sell them to an elevator? Did you sell them to your neighbor who raises hogs? Who did you sell those bushels to, and what's the contract look like? In my history as a broker or trader, when we have a small problem regionally, oftentimes your elevator will let you roll. If your elevator has those bushels already sold, bundled up, going on a train to a ship, it's a lot different, more touchy situation. So it depends on what our carryout is. Like this year, we have a huge carryout. If you came up short in your area, I don't think anyone would notice there'd be an opportunity to roll. If the whole country came up short, like a 2012 drought, and you have $5 corn sold in a $7 market, I would think someone's going to expect you to deliver that. What do you think, Brady? Great question.
It is a great question. Yep. And I think it goes back to defending the decisions you make in your marketing plan, how you're executing your overall marketing plan, not just one sale or another. And to your point, Tommy, about an inverse versus a carry type market, and how big is that drought? Is it just a micro drought? Did you have a hailstorm come through and wipe out your crop? I mean, today, if you're short D's corn at 473 and you can roll it to D's 25 at 488, pick up 14, you made a better sale in D's 25 than you did for D's 24. But sometimes we get in that spot where we got a $5 hedge in D's 24 and we're rolling it out and down and taking a 50-cent hit in an inverse market. So it's
I will end the show with this story, my friend. I was old enough to be in the pits in 1995 when July, I want to say, traded about $1.60 or $1.70 over D. So that was the great debacle of where people sold multiple years crop in the wrong year. They were out of position in a way that it became very cocoa like on how far and how fast that front month went up. So it's very important to stay in position, and I'm sure one day we'll no one tells the story better than Ben Peters at Advanced Trading when he went in the boardroom of that co-op and they said, "We think we have a little problem." He's like, "I think you have a huge
We need
problem."
to get him
And
on and tell
people,
that story, Tommy.
it's a great story. It'd be some interesting premium content. Remember, folks, history often repeats itself. We go years and years thinking that no one's ever done something, and then all of a sudden you see someone make a silly move in the markets or get out of position in futures and options. But yes, back in 1995, July corn was $1.70 over D's. Now that doesn't sound like much. Corn was 250 the year before. So when you roll into an inverse, you take a 250 product and all of a sudden you're $1.70 out of position. People were delivering grain to the elevator and pretty much having very little money left. I mean, it was truly a debacle. So we'll break
Here, I
that down. It'd
thought
be a great story, a
Cowboys were
great
the
learning
only ones
lesson.
that wanted to work free. I thought Cowboys were the only ones that wanted to work for free.
Yeah. Well, speaking of free, that's why when someone says, "Why are you charging for ATI ProMedia Premium?" I say, "I won't charge you. I'll just need to pick up 10 bushels of corn for free. That's all." I mean, it's all good. So ATI ProMedia Premium's $1 a day. We hope you subscribe. www.atipromedia.com. Click like and subscribe. Get a hold of us 1-855-737-FARM. Info at ATI ProMedia. And you and I thought we had nothing to talk about today, Mr. Huck.
You never know, Tommy. You never know.
See you, buddy.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.